What's going on, guys? It's GBP baby. Welcome to another video. It's currently 29 minutes past midnight. On Wednesday the 2nd of August, we're going to be reviewing Tuesday's price action today. We're looking at Dixie Daily. We'll then go on to GBP and then we'll work our way through Euro as well. So as expected, we traded into the highs that I marked out in yesterday's video, so make sure to check that out. It was nice to see the push up. I didn't manage to trade today. I was going to trade GBP, but again, I was still quite unsure in terms of where I was anticipating price to trade to. But it was nice to see still a push on Dixie, and now with this push up higher and the fact that we've closed at this fair value gap, I now want to start looking for a potential reach into this higher fair value gap that's resting up here. So I'll show you what I mean. So now that we've closed above this swing high, I want to see if price can reach into this fair value gap resting above here. So I'm just going to mark that out as fair value gap. And I'm also going to mark out this fair value gap, which we've now we've traded through. We've traded through it. So I'm going to make this red. And what I'm also going to do is I'm going to split both fair value gaps into quarters, because as you know, it's important to grade your fair value gaps to understand how price is trading through it. So just bear with me whilst I do that now. But I hope everybody is well, hope everybody is healthy, and I hope everybody is staying safe in these conditions. So I'm just going to split this up, and you'll notice there is also a breaker block here. I'll show you that in a second. Let me just finish marking these out and then we can take a look at that. So now I've graded each fair value gap. You can see we've got the first quarter, second quarter, third quarter and fourth quarter of the fair value gap that we traded through. And we've got the first quarter, second quarter, third quarter and fourth quarter of the fair value gap I'm anticipating price Dixie to trade into. Now I did want to point out this breaker. We got a high, a low, a high, high, low, higher, high and a break. I am going to show that with the path tool just so you guys can see that more clearly. High, low, high, high, and then price breaks lower. So if we drop down to the 4 hour, we can actually find the actual order block that will create the breaker block, if that makes sense, because I'm looking for the order block that starts this movement upwards. Yes, technically it's this candle here. However, if we drop down to the 4 hour, we can be a lot more precise with that. So we're going to do that now. And then we've got our high, our low, and our high there. And then you can see this candle here is the last down close candle before the movement upwards. So I'm going to mark out this low as the breaker low. To be honest, in a situation like this, I don't know whether to use this low as the breaker low or this low. If we drop down to the 1 hour, I think we might have a better look. Yeah, it might be best for us to use this low, which happens to line up with the 50% level of this fair value gap. So what I'm going to do is I'm going to make this black. And considering that's the low of the breaker, high, low, higher, high, I'm just going to mark that out as breaker low. But yeah, we can move this in like that, and then I can mark right breaker low here, daily breaker low. And then we have that for reference, which happens to also be the 50% level. So, and then we also have this buy side liquidity resting here, this swing high. So I'm going to mark that out as buy side liquidity. Buy side liquidity. We'll make it thicker. And yeah, we can have a better look at how price has done today. So let me just quickly get my daily dividers up and then we can have a better look at what's happened. So here's our daily dividers. We can see Monday's trading here, Tuesday's trading here. We are currently still in Tuesday's trading. And you can see how during London we moved higher. And then in New York we had a continuation. Found support on top of this fair value gap, and right now you can see we're just pulling back into that range one more time. I do believe it's likely we're going to take out these sell stops. Price will likely want to return down to this 50% level. Remember, this is the 50% level of that daily inversion fair value gap. This is an inversion fair value gap because it was traded on the downside and we've traded through on the upside now, meaning that I want to see it show support. And in order for me to be convinced that this is going to continue to show support, I want to see price stay above this 50% level. You'll see there's also a volume imbalance here where there's no trading. So it'll be interesting to see how price responds to that. I'll just mark that out like this. And yeah, I am anticipating us to run into this buy side liquidity and up to that daily breaker low. There is an opportunity here as well for us to look at a measured move. Due to this breaker, low, high, lower, low, we can use this in order to cast higher where we expect price to go. And I'll show you what I mean by that. So if I get my Fibonacci and I grab the lowest closing candle off the breaker, and the highest close, and we cast it up -1. Let me make these thicker for us. You can see that reaches this level, and that level is where the buy side liquidity is. Price trades is, price is expected to trade up to the -1 level. Like when you cast up breakers like this, price is anticipated to trade up to that, which is why I'm confident that it's likely that Dixie is going to want to push higher tomorrow. Furthermore, we've reached the 50% level, and you can see that we're starting to get a pullback. Every time we reach a 50% level of a range, there's always a run on stops. I'll say that again. Every time we reach a 50% level of a range, there's a run on stops. So this is anticipated, and that's what we can see happening right now. So if I extend these lines out to the right, how do I do that now? Extend right. If I extend that to the right, you can see how we reached 50% level, which was here off the 50% level of the extended range. And you can see we're getting a run on stops now. So I'm expecting some kind of sell side liquidity to be grabbed before a push higher. And when I say 50% level of a range is when you see a run on stops, we can even see it on the bigger move. And I'll show you this. If we anticipate price to trade up to this buy side liquidity, and we look at the low of here, and we drag and we drag it right up to our anticipated price range, you can see even at a 50% level, we trade through the 50% level, and what happens, we get a run on stops here. This sell side liquidity gets grabbed, and then we find support and we continue higher. So I am anticipating us to trade up to that before getting some kind of reversal. Let's drop down to the 15 minutes, see if we can see anything else. Not too much price action, to be honest. You can see again we pushed up during London, continuation in New York, then we started to consolidate throughout London close, and then now we're starting to get a nice pullback, and I'll then expect some kind of push higher during London in Wednesday's London session. We also have relative equal highs here, so what rests above that, buy side liquidity, and that's going to be paired with this buy side liquidity on the higher time frame as well. And yeah, that's pretty much everything. It'll be nice to see some sell stops grabbed below this swing low here, which is why I can imagine us pulling back down there to grab those stops to then release them above there. So with that in mind, with us expecting higher dollar, we can then go to GBP and expect lower GBP. So let's just go to GBP, see how we traded today. This was Tuesday's trading here. We have Monday's trading here. Let me get rid of this. You can see we consolidated pretty much all through London, and then as New York opened, we started to fall lower and we ran into this sell side liquidity here. You can see we traded through, up, down, higher, lower, and now we've just broken higher again. Now this is a reversal pattern technically, however, because we're anticipating higher dollar, we should be therefore anticipating lower pound as well. So let's just go to the daily and see how it traded a bit more clearly. So you can see we traded lower, and then Tuesday we traded, Tuesday we traded lower, took out this outside liquidity, and now you can see we're just trading higher back into this bearish order block. So let me just mark out this daily order block because it's important to realize that we're trading to this open. I'm going to get rid of this. And that, since as price trades into this, I then want to start looking for any kind of sell side liquidity that price will want to trade to, because as I said, I am anticipating lower prices on pound since I'm expecting higher prices on dollar. So what kind of PD arrays do we see resting down here? Well, we have this bullish order block here, this massive one. These two candles make a bullish order block, so I'm going to mark out the open of that. Yes, we've traded to it, but I can anticipate price trading down into it and actually closing into it tomorrow. So I'll make that thicker. Also, it is the GBP's interest rate decision. So there is going to be a lot of volatility on GBP in general, which is another reason to anticipate that kind of movement. But I'm going to write bullish order block here. And I'm also going to mark out the 50% level of the bullish order block. Why? Because that's mean threshold, and that is the deepest I'd expect price to trade to before turning around if we are to continue with bullish movement in the long term. So let's mark out the 50% level of this range. And that will be here, 26806, 26806. I'm going to make a dash line and I'm going to put mean threshold. There we go. And then if we drop down to the 4 hour, we should have a better look. So you can see there's a lot of consolidation here. We do have this swing low that's likely going to get taken. You can see we just traded into this fair value gap. It'll be interesting to see tomorrow how we trade, but I would like to see a push lower. And like I said, and I did mark out this little fair value gap that's resting just below the 50% level where price might want to reach into, considering the south side liquidity is resting below this low and this low. Are these daily lows? This is Thursday's low, and this is Monday's low the beginning of July actually. So let's mark out this fair value gap resting here. And also another thing to note, this is the 50% level of a daily inversion block, I believe. So it's important to look how price is consolidating around that. We traded through it, closed below it, and now we've come and we've touched it. So I'm expecting it to kiss it goodnight and continue lower. So I'm going to mark out this as our draw on liquidity, which happens to be at 50%, and there's a breaker here. Why? Low, high, lower low, and then what happens? Price breaks higher, making this swing high here a breaker block. It's this wick here, so we can just drag that out. We'll make that red, or make it orange. No, let's make it blue. It's getting very colorful, as you can see. I am going to get rid of this massive order block in the background just to make price a little bit more clear. And now we were focusing on this bullish order block, daily bullish order block, the mean threshold of it, and obviously that fair value gap that's resting just below here, and the breaker block. So let's drop down to the 15-minute and let's see how price traded today. You can see we consolidated all through London. We hit 5:30 when we start to break lower, and then 7 o'clock hits. We find support, resistance, sorry, and then we break lower. We come and touch it, and then we trade lower into the bullish order block. And what happens? We have a reaction, of course, but now look, we've taken out buy side liquidity. So I believe this is a short-term buy side getting taken out before moving lower. And also, as I said earlier, remember at 50% of the range, price is expected to run on sell or buy stops. This is our range. This is our anticipated range. If I'm anticipating price to come down here, this is the 50% level. What happens? We trade to fit. Wow, let me do this more properly. So we have the range from here, and I'm anticipating price to trade down into this breaker, remember? So we trade lower, all the way lower. This is all time dilution, but we trade lower. We reach 50% level, consolidate. What happens? 50% run on stops. We got run on stops, just taking out sell side. So now I want to see us push lower into that sell side liquidity. So yeah, that's pretty much everything, guys. Let's have a look at euro. I haven't actually looked at euro today. You'll notice that euro didn't actually take out a low the same way pound did, and we've traded higher again. So I can imagine euro is going to continue to remain quite consolidated. Let's just see. So yeah, we traded higher. It's likely that euro is probably going to stay in its range. I mean, it'll be interesting to see a little pullback. We've just taken out this swing high here. Let me see. And we're just trading into the fair value gap. Right, so I'm expecting some kind of south side liquidity to get hunted. Whether we want to trade down lower than this swing low, I don't know, but you can see how euro is consolidating whilst all the actions happening on GBP. GBP's made a lower low. Dixie has made a higher high, but euro has also made a higher high. So euro's going to have to do some work by the looks of things. So maybe you should keep an eye on euro. In fact, what I'm going to do is I'm going to compare the three, and we can start to, and then we can have a look at what to expect from euro. So let's add Dixie. Let's add GBP USD. I usually put euro and GBP together, and let's look at what price has done, and we'll look at the 4-hour. So we can see that euro's made a higher low, GBP's made a lower low, and Dixie's made a higher low, obviously, or higher high, so to speak. So let's just consider that. So this is what I mean. You can see that euro and pound are in tandem, but euro's not. So I believe that euro is going to have to do some catching up on the downside. So maybe euro might be the one to look out for in terms of wanting to trade it, because like I said, euro should have made that lower low, but it didn't, and we can see this divergence here. So there's some kind of distribution going on. Let's go to the daily and see what we can see. There is also this massive fair value gap resting below here on euro, which hasn't been traded to yet. So we might want to remember this is Wednesday trading now, so we might want to anticipate euro having a big movement downwards to catch up with pound and euro. That's to catch up with pound that's moved lower, and dollar that's moved higher. But yeah, that's pretty much everything. This has been GBP baby. I'd definitely keep an eye on euro today, but although, like I said, the interest rate decisions are happening on pounds, so it'll be interesting to see what happens with all that. But yeah, that's going to be everything, guys. This has been GBP baby, and I'll catch you in the next one. Thanks for watching. Don't forget to subscribe, don't forget to like, and please guys do comment. I haven't had many comments recently, so don't forget to leave a comment below. Peace.